Hey my YouTube friends, welcome back. I live in Seattle area and I'm working in the tech industry. Many of my friends who used to be working with me have joined Meta. People are talking about Meta differently, but one thing in common is that all of them are saying Meta just to give a way bigger package than anyone else. Oftentimes when my friends and I gather together, and some of them will say like, I got a 3.5 million house here, and some of them may say, okay, I bought a 4 million house the other week. And because of how much they earn, how big the package they have, they just push the housing market of Seattle area to higher and higher level. And sometimes they're complaining that the workload is too heavy, they have like poor work-life balance, and sometimes they say when the performance review season comes, they think the performance review in Meta is so like tedious and exhausting. And sometimes they're complaining that the individual contributors, the developers in Meta, they don't like the way they collaborate with each other, and sometimes they're like bad competitions in that. But after all, when the season of the stock refreshment or when they got their bonus, all the complaints seem to be gone, and they're pretty content with where they are, and they feel like they can hang in there and work for this company for another year or maybe even longer. So instead of like being jealous of my friends and watching them hooray for their company stock to hit another historical high stock price, should I also consider to invest in Meta's stock with my own money if I haven't already done so? The problem really is in the past 2 years, Meta's stock price has gone from a relatively low level of just over $80 all the way up to more than $500. Increased by 7 times over the last 2 years. Is it too late? Are there still going to be like headroom ahead for Meta to hit more momentums? The stock price goes up higher even more. So here is my study you want to hear. Okay, first let's go for the basics. Meta, as of today, it traded at $528 after the market closed. And the one or two very important metrics I want you guys to check out is the trailing PE ratio and the forward PE ratio. As you can see in Yahoo Finance, the trailing PE of Meta as of today is 27.22. And if we look at the forward PE, it's even better. It's just the 26.04. For those are not familiar with the PE ratio numbers, if this number is smaller, it indicates that the company has a higher ratio of its returns compared to its stock value. If you look at Microsoft stock, as of today, it has a trailing PE ratio of 35 and a forward PE ratio of 31. So good for Microsoft. It's not like inflated really high, but if you just by looking at these numbers, Meta seems more attractive than Microsoft. Then let's take a look at Apple's. And for the record, these are the best company in this planet and the best companies in the market. Let's see how they perform. And as we can see, Apple has a trailing PE ratio of 34 and a forward PE of 29. These are very healthy numbers for these high growth tech companies. And even though it seems like Meta has a more promising PE numbers compared to Apple and Microsoft. Let's also take another look at Tesla. Tesla is one of the like superstar stocks. And as we can see, the trailing PE is 59.17 and the forward PE is 92. Even though I'm a shareholder of Tesla, this PE ratio and even this one is kind of in a little bit shaky territory. And just by looking at these numbers, it seems like Meta is a very solid, profitable company. Next, let's go a little deeper to look at the most recent earnings from Meta, which is the Q2 earnings 2024. By the way, I really like Meta's financial reports. It's very clear, it's very clean, and all the numbers are the most important numbers. And it saves you a lot of time to try to find the key numbers, and it's really, really clear and clean here. So okay, so let's go through the second quarter 2024 financial highlights of Meta to get a sense of, and how about its revenue, its net income, and especially important, what's the outlook of this company coming into the next quarter of this year. In the second quarter of 2024 financial highlights from here, we can see that the 3 months ended June 30th, 2024 was $39 billion revenue. That compares to 1 year ago, just 1 year ago, 2023, that was $32 billion. That was up by 22% in revenue in such a big scale. We're not talking about millions. We're not even talking about billions. We're talking about 40 billions. So 22% is a pretty huge jump in terms of the revenue growth. And if we look at the cost and expenses, it also grew from 22 billion to 24 billion, a 7% increase. But compared to its revenue growth, this is a good cost management, I would say, for sure. And also another very important, a few very important metrics, that the income from operations increased by 58%. Wow, 58%. And also the operating margin increased to 38%. And those are the benefits of these software or internet companies, right? They have super high operating margins compared to those manufacturers, even though the manufacturers and the traditional industry leaders, they're leaders in their respect industries. It's really hard for them to have operating margin or gross margin of this high compared to these like information technology companies. Also, if you look at the net income, it has gone up from $7.7 billion all the way up to $13 billion, a whopping 73% increase year over year. Wow, this is very, very impressive earnings report. This is very impressive. And moving to the outlook, this is another piece of key information is that the CEO mentioned they expect the third quarter of 24 total revenue to be in the range of 38.5 to 41 billion. Okay, remember this number. Let's compare that with this quarter, 39 billion. Okay, I don't think this is a good growth. I don't think this is a good quarter-over-quarter growth. I guess that's the one weak point coming in this earnings report, and that's why I think initially Meta stock price dropped after they reported this earnings. I think this would be one of the key reasons that, okay, these are two outlook kind of giving a early expectation management to the investors and to Wall Street is that Meta coming into 2025 will continue investment large in AI area, in AI domain, both on the computing power, also at the human resource. Okay, in general, I would say Meta has a very strong earnings. Even though its Q3 outlook is not as like beyond expectation, blow everyone away, it's pretty solid and it's kind of following its existing plan and footprint moving forward. Next, I want to bring everybody to this article. This article was posted earlier this year, a few months ago, talking about the AI efforts that Meta has planned for this year after its AR, IR technology is kind of like the key effort currently going on in the company. So basically in this article, it's talking about two things. One is the AI products and AI features that the company is currently working on. The other is how and what they're building for their computation powerhouse in Meta, that they're building out its infrastructure to accommodate the push, and they plan to have about 350,000 H100 GPUs from NVIDIA, of course, by the end of this year. In combination with equivalent chips from other suppliers, Meta will have about 600,000 total GPUs by the end of the year, he said. The amount would make Meta system, once finished, among the largest in the technology industry. By comparison, we have a few numbers. Okay, so from Amazon, they'll build a 100,000 based on its Trainium 2 chips, while Oracle will bring online a system with 32,000 NVIDIA H100 GPUs. And there's a very interesting information out of this. You need to see this, that even the Meta spokesman declined to specify which GPU suppliers the company was using aside from the market leader NVIDIA, though it has said publicly it also plans to use chips from AMD. Mark that, AMD compensate the lacking of 250,000 GPUs which Meta has built its infrastructure. I've also read a few other articles that Meta talking about its AI roadmap, talking about its products and features. It really doesn't seem like they have like a flagship copilot of their own, or maybe every single Meta app is their flagship, and they'll deeply integrate large language model and AI technologies into every single of its flagship app and service. And that's the power of Meta, right? They're building technologies, evolving people, and they have so many apps, have so huge reach to people. They have daily active users of more than 3 billion every day. Imagine we just have 7 to 8 billion people in the whole world. Not everybody have access to internet. So almost everybody in the planet, or at least the 1 out of 2 people in the world, has been active on Meta's products. So once Meta has some technology, some AI efforts, and some AI technologies, they can easily reach a large group of people. Every single flagship app or services are the power that Meta has, right? And another factor people easily neglect is that Mark Zuckerberg is the CEO and the founder of Meta that's still working. I mean, in these large companies, many of the founders of the company has like either retired or shift a big part of their focus into something else, into some like new adventures of theirs. But Mark is still like fully 100% devoted to Meta, which is a huge driver because for the companies at this scale, if their founders are still CEOs, they have stronger power and they have more trust from the board, from the shareholders to like realize their vision, and they tend to bring more juice to the company and bring the company to a further step up. And I'm pretty sure Mark would like to do everything he can offer for his company. Okay, so in summary, is Meta now a good time to invest? I think it's a good time to invest, but for my trading portfolio here, I share it with you guys all the time. I think based on the outlook and based on the forward PE ratio versus like trailing PE ratio, I think there's like a 10 to 20% more headroom for Meta in the near term. It's good, but it's not, in my opinion, of course, in my opinion, as good as AMD at this point. And AMD is only rival and can offer similar things than anybody else. Lastly, I want to show everybody else my portfolio. So in last week's video, I was saying that I quit my positions on Nvidia ahead of its earnings. I explained my reasons in my previous video if you want to check that out. And as you can see, my portfolio now is over 100,000. I want to keep this momentum going, considering there are lots of good things happening right now. The Federal Reserve finally kind of like obvious that they're going to cut the interest rate in September. And it seems that the stock market and the US economy is like stabilizing into the holiday season of this year. And typically Q4 is a good season for the stock market. And hopefully we can keep the momentum. And I'll share with you guys this portfolio, how it goes and my thought every week. I'll post a video on Monday morning at 9 a.m. every week. So if you like this kind of content, if you like this video, please consider to subscribe to the channel. I'll see you guys in the next one.